What's up everybody? Welcome to the Stocks channel. In today's video, I'm bringing you another stock market technical analysis update, and we're going to start out by looking at the ticker symbol SPY, which is the S&P 500 ETF. Now before we get into it, don't forget to go ahead and smash that like button and subscribe to the channel so you don't miss any future technical analysis updates. Now let's crack open these charts and see what's going on in the stock market today. So just as we expected, we had another bullish day, and we still have these two gaps below, which are going to act as support when the price decides to stop running and come back down. Now remember, I said once the gap closes at this $332 level, any price action to the upside is going to make a quick run to the previous all-time high, which is this $338 level. Now with a close today above 332, I expect somewhat of a melt up until we get to this previous all-time high and possibly to this 1x Fibonacci extension level of $341. So right now on the S&P 500 SPY ETF, I'm setting a price target for 338 and 341. Somewhere in that range is where this market looks like it wants to go, and it's trying to get there in a hurry. Now remember, there's still a lot of bullish momentum, and we see the 5 EMA is taking off and running up above the 13 EMA and starting to create some separation, which is a sign of strong momentum. We now have two bullish gap ups as well, where the price has gotten ahead of itself and the price has actually skipped these price ranges where there's been no price discovery. So right now, because we had such a solid bullish day and a close above 332, we're watching the price action to get to 338, and that will be the next strong level of resistance. There's really no resistance between 334 where we closed today and this $338 level, so I expect to see us get there very quickly. Now any sign of weakness, we'll start to see the 5 EMA roll over, and we would expect to see these lower gaps close very quickly in any turnaround of this market to head to the downside. But right now there's a lot of bullish momentum, and I don't have any way to know when this market's going to turn around because it's so strong and the momentum is so strong right now that there's no reason to be a bear. So remember, in order to be a bear on this market, we need to see some of these moving averages turn to the negative side and start crossing over to the downside, and we have yet to see that. So right now we're watching 338 and 341 on the S&P 500, and let's go ahead and look at some of the other sectors and see what's going on. So in the Nasdaq 100, we're looking at the QQQ ETF, the triple Qs, and we also have a bullish gap up below the price action as well. However, on the Nasdaq 100, we're at new all-time highs with every higher close that we get, so there is absolutely no resistance above. Now I am watching this 1.618 Fibonacci extension level of this 280 price, and it also looks like the Nasdaq 100 wants to get to that price level in a hurry. Now that $280 price level is about 2% higher than today's close, and I expect to see us get there very quickly. So again, I say that this market's melting up because anybody shorting this market right now is getting absolutely destroyed by all of this bullish momentum. It is not the time to be bearish on this market, no matter what you think. The technicals are saying that there is no room to be a bear right now. Now once we hit these upper price targets that are only a couple percent higher, that story could change very quickly, because as you remember, I said the market takes the stairs up and the elevator down, and we could definitely see the scenario where this market is kind of walking up in a stair-stepping motion, and when the market decides to go down, it's going to look a lot more like an elevator, meaning it's not going to take nearly as long to go down as it did to go up. Now there's no reason to try to predict these tops, and you really want to see the technicals tell you when the market is turning to the downside. So right now, if you're a bear, you really should just be out of the market completely. I would not be shorting this market. So if we go back to the daily chart, we see that the Nasdaq 100 has had an extremely strong rally, and it's continuing because we see the 5 EMA still well above the 13, and the price action had another giant green candle today, which is another sign that there's a lot of buyers in this market and not a lot of people are willing to sell at lower prices. So as long as we see people buying at these higher and higher prices, it's going to take no time at all to go ahead and get to this new all-time high at this $280 level. If we jump over to the VIX, which if you remember is our fear indicator, we said we need to see fear leaving this market, and that's exactly what we're seeing with the VIX closing even farther below our support level. The close of 22.7 today is well below our 23.5 level that we said we want to see the VIX close below if we're going to see new all-time highs. Now remember, I said these are early indications that new all-time highs are coming, and now we have these indications for 2 days now, so I'm expecting the market to melt up and we're going to see these new all-time highs. So if we jump over to the other sectors, we have the financials, which didn't really have a great day today after yesterday's bullish rally. However, we still see it starting to break above this resistance trend line, and we see the 5 EMA starting to show some signs of life and breaking above the 13 EMA. Not much, but it's a start, and we would like to see the financials break above, form a new high, and start heading up to test this 200 simple moving average. Now keep in mind, when a stock trades below its 200 simple moving average, that's always considered bearish. So we're not saying we're bullish on the financials right now, but it is good to see them showing some signs of life and trying to break out of this wedge consolidation pattern that it's been in. Any breakout to the upside of the financials is only going to confirm the move in the S&P 500. If we jump over to the industrials, we see we had a huge bullish day yesterday, which is followed up by another bullish day today. Now we do have this sizable gap below us, but there's no guarantee what time frame those gaps will close, and we see the 5 EMA breaking above the 200 simple moving average, and the 13 EMA also coming up here showing some positive momentum as well. So anytime you see moving averages crossing above to the upside, that's always going to signal bullish momentum, and that's going to bring buyers that are watching these technicals into this market. So we see bullish action on the industrials, and that is going to help the S&P 500 continue to run, and that's why I'm saying we're going to see this melt up and we're going to see new all-time highs. If we jump over to the healthcare sector, we see somewhat of a weak day. However, there's still a bullish momentum with the 5 EMA well above the 13, and the 13 still trading with a positive slope. We also see the 20 simple moving average with a very aggressive upward slope as well, and we saw a nice bounce off the 20 simple moving average today, which shows us that this market's still bullish and support is being found on these moving averages. So the market's not even coming down to these horizontal levels of momentum anymore. It's coming off these simple moving averages, which is showing us a bullish trend. So I would also expect to see healthcare breaking out to a new high, which would also confirm the S&P 500 bullish momentum and the new all-time highs that will be coming. If we jump over to the dollar, I still think we may have seen the bottom today. Really, the price didn't go anywhere, but you see that this continues to act as support around this $92.50 level. Now we're still going to keep watching the dollar, because any sign of strength in the dollar is going to tell us that asset prices should correct a little bit. But as long as the dollar is weak, we expect to see assets continue to inflate and keep going up to higher and higher prices. Now that can be shown here. If you look at silver to the US dollar, silver had an absolute monster day, going up over 7%. And again, I'm not surprised. I expect to see silver, gold, Bitcoin, and equities like stocks to continue to rise as long as the dollar continues to weaken. Now we've been covering Apple on this channel this week, so we'll continue the trend, and we see Apple had an absolute monster day, going up almost 3.5%. Now this is actually very surprising that Apple's showing this much strength, and like I said in the other video, I believe this is just tech FOMO. That doesn't mean Apple isn't a good company, but we have these huge gaps below us where there's been no price action, and Apple continues to melt up higher and higher, trading well above the Bollinger Band now with 2 gaps beneath. So I would expect to see a cool off in Apple, and I would like to see Apple come back down, close this gap before continuing its uptrend. So any sign of weakness in Apple, because it's a market mover in the S&P 500 and the Nasdaq 100, will give us a hint at when this correction for the stock market may be coming. So because of that reason, we'll go ahead and continue cover Apple on this channel, so that we know if Apple starts to roll over here and start heading down, we know that'll be another signal that the indices might start correcting as well. So let's also jump over and check out the Dow, and we did see the Dow start to break out of this wedge pattern that it was in as well, where it was consolidating, and we saw the Dow sort of show some weakness, but now showing some strength and breaking back above and forming a new high. Now we still have this high over here, so it's still a lower high, but it is showing that the industrials, especially in the Dow Jones, is really showing some strength as of late, and it's nice to see all of the indices aligning and they're all moving up together, because that tells us that the move is more than likely real. It's not just one sector like tech carrying the entire S&P 500 right now. So if we go back to the S&P 500, keep an eye on these gaps below at $330 and $327, but more than likely we're going to see this $338 level tested, and a break of that should easily bring us to this $341 level that we see on the Fibonacci extension. So this market is still extremely bullish. There's no reason to be a bear right now, so don't even think about it and continue with the trend. If you want to fight this trend, you're playing with fire, and it is not going to end well for you. So please remember to like this video if it helps you out, and subscribe to the channel so you don't miss our future technical analysis updates. Thanks for watching, and as always, I will see you in the next episode.